Hey guys, welcome to Pippin and Dippin. We got Hunter Burkett here and me. I can't. My name is Make America Great Again today.
There you go. There you
Uh,
go.
hey, before we get started though, really important. Hit the subscribe button below. It's on one of these sides. I don't know, Hunter. You point on one side, I'll point on the other, and you should see a subscribe button there. Make sure you also put in the comments "I subscribed," and we'll get back to you. We might even have a special gift for you. So make sure you put your in the comments that you subscribed, and
And
we'll get
push
back
that
to you.
like button.
Hit that like button. Hit
Yep.
that like button. Yes. So, hey, today we wanted to talk to you about the U.S. election tomorrow, and we're not going to get into the political or anything like that. I know I have my background set up with the American flag and the "Make America Great" hat again. I'm not getting into who I'm voting for, who you should vote for, anything like that. That's not why we're doing this. We're just having fun with this. And we wanted to show you really what happens and why you should or shouldn't trade. Really, the election day, the simplest form, we can give you the answer right now. Don't trade at all. That would be our biggest recommendation, is do not trade at all until the election has come and gone. And really, it's kind of ironic. It falls on a highly volatile week, anyways, of trading, which is non-farm payroll, or NFP, as some of you might have heard the acronym before. So it's really interesting that the election day always falls on the first Tuesday, or the first Tuesday following the first Monday of every 4 years, and it has been that way for forever and ever and ever. So it's pretty cool. It falls on NFP, highly volatile, so it could be really lucrative if you did trade, but you could lose a lot of your money as well. So we would recommend right out of the gate, just don't trade. But let's go ahead and take a look at some things here, Hunter. While I'm pulling up my chart, Hunter, feel free to add in any other nuggets you want to share with them.
Yeah, but I just kind of want to piggyback off what you said, man. Just the volatility itself. I look at it as, why risk your account for a something that happens every 4 years, right? And especially being on a very volatile week in general. I This is the time where you need to step back. You need to do a little back testing. Look at different things in the market. Go do or do your norm, or go out and spend time with family. This is the best time for that, right? Because this is a very political week. There's a lot of negativity going around and things like that. um, and also, this is a great time for demo trading. See what you can do in this week, and be ready for it next time it happens. It's not like that you have to adapt to this eventful thing, because it only happens every 4 years, right? So, I just kind of wanted to put that in play. And if you do trade, we're going to be going over this a lot. I'm going to just go ahead and say it now. Joe will be going over it a lot while he's going over the dollar. Is risk management. If you do trade in this, you are a seasoned trader. You've been trading for a little while. Have proper risk management in play. If you have that in play, then you shouldn't have nothing to worry about, right?
That I mean, and he hit it right on the head. Hey, and before we forget, make sure, if you haven't, I mean, the other than being free in America, the coolest thing that we get to do is we get to vote every 4 years and get to vote for our elected officials. So if you're not happy with the way the dollar is performing, the way your money's performing, well, this is a great opportunity for you to vote people in that you think will help you get to where you want to go. So uh, don't take that for granted. Definitely get involved. Go out and vote today. If you haven't already voted, you have, tomorrow to get in, mail in your votes, whatever. But I just wanted to pull up the DXY chart here. So I'm going to pull up the last election day, which was November 8th of 2016, because that was the first Tuesday after the first Monday. And how I know that is, if I come in here, you can see the first Monday didn't happen until the 7th. So the first Tuesday following the first Monday of November every 4 years is how it's the election day. So we're going to November 11th or November 8th, 2016, when Trump took office, or was voted into office. So we'll go ahead and hit that. And for those of you that don't know, oops, sorry, I need to go to the daily chart to do that. My bad. For those of you that haven't done this, to go back that far, typically you'll have to be on a higher time frame chart. I think you can get to it on the 4 hour, the 1 hour, possibly, but the 4-hour and the daily, you can definitely get to it. And then this little icon down here at the bottom of this calendar, just click on it. You'll get this pop up. It'll say go to. You simply hit the calendar and choose the date that you want to go to. You can even go to a specific time if you wanted to. You can add that in. But we're just going to go ahead and go back here. And one of the things that we want you to notice here is here was the election day. All right. And it was pretty, not a lot of volume, not a lot of movement here. There was wicks at both ends, which means it was, really the market was indecisive, and they didn't really know what it was going to do. And then, with the unsure of what was going on, everybody thought Hillary was coming in, and so price was coming down. And then they found out Donald Trump was going to be our new president, and everything kind of settled down, and it got very bullish. In fact, it stayed bullish, for basically the next month after he was in office. And if you look at the indices, you'll notice that as well. So we can kind of even go here and just look at gold real fast. It was very, very pretty to look at during that time frame. So here we go. Thought gold would be going up, and then Donald Trump was elected. Everything kind of settled, and then it came back to normal. And look at this nice big run because the US dollar got really strong. And typically what you'll see, just, if you haven't done your history or your studied history of the Republican Party and the Democrat Party, like, again, not to say one's better than the other or anything like that. What typically you'll find is when a Republican is potentially going to take office or take over office, you'll see that the US dollar will typically get a little bit stronger and more bullish because they're focused on lowering the national debt and adding more jobs into the private sector. And where the Democrat Party is the opposite, to say they want to disperse it, so they'll spend more money. And when you spend more money, typically the value of the dollar goes down, right? If the government's spending more money because you have inflation that happens. And so that's typically, like I said, that's just a general overview. I'm not an economist. Please don't take my word for it. Go do your homework. But that's typically how you'll see elections go. From my understanding and from the research that I've done, is that when the Republican Party is in, you'll usually see the dollar get strong or stronger once everything settles and the dust settles. And then it'll kind of stagnate after the first 30 days, and it'll be stagnant for the first quarter. It will move, but it won't have huge gains up or down. And that it doesn't matter what party gets voted into office. So really important for you to understand that. But looking at this gold, I mean, if you got into gold after everything settled, it was a great trade. Starting from, if you waited for it to break this structure right here to the left, which it did. So if this was Tuesday, Wednesday, Thursday, Friday, it broke the structure on Friday, and then it did a nice continuation. So the following week, you could have definitely got back in. It was nice. And if you're like us, we like to look for areas of resistance and support. And then we like seeing these big wicks like that, because we know that means it's been exhausted. So a trend reversal is probably coming, or a trend change is coming. So you can see, if you follow it, the biggest thing is just stay out of the market during election day, unless you're willing to lose money. Don't put money in that you can't afford to lose. That's really the bottom line on this. You can see, and you can go through your pairs, but let's go ahead and look back real fast at the dollar when Obama was elected for his last 4-year term. So that would have been 2012. And let's see. So we're in 2012. Here's the first Monday. So it would have been the 6th. Let's take a look and see what happened here. All right. So again, US dollar stayed pretty strong. All right. Nice bullish move. It didn't move as much. You can see it still was wicky. It was indecisive on election day, and then it had some huge wicks. Again, this kind of goes back to how the market performs when there's non-farm payroll, which happens the first Friday of every month for where it's a highly volatile week of news. So you can see there's a lot of wicks, so a lot of indecision, a lot of market manipulation going on. And then sure enough, then it came back down. All right. The US dollar started dropping back down. Just like we said, it typically, and the reason is not because, to get political, not because one president is worse or better or anything. It's just typically how the market moves in accordance with the historical data of their parties that they represent. That's really what it comes back down to. Let's take a look and see what gold did. 11/6, so November 6th. Yeah. So again, it kind of jumped up. There was a lot of indecision, made pattern, and then it came down. All right. Where the other way it went, it started going up, right? So it tends to go up and then go down. All right, because the US dollar. So just follow the US dollar. That'll help you out a ton. The big thing is stay out of, it's probably best to stay out of the market, like I said, unless you can afford to lose. It is worthwhile. It can be very lucrative if you're a seasoned investor, but that leads me back to what Hunter's going to talk to you about, which is some things. He already kind of gave you some ideas to stay out of the market and keep your mind busy on other things so you don't worry about the fear of missing out. But Hunter, chime in here, man. Are there any things that you want me to
Yeah,
share?
it's just if like Joe said, if you're not a seasoned trader and you've been trading for a short period of time, this week alone is just a real emotional week. Like I said, a lot of negativity, a lot of indecision. So why even put yourself in that category of trying to go down that rabbit hole of trading in an emotional week, right? If you're already an emotional trader. Not to get off topic, but if you guys haven't went and checked out that mindset hack video that me and Joe put up, we're going to link that down in the description. If you guys are battling with any emotions, go check that video out. It's going to help you tremendously in your trading journey, because the hacks that we went over in that video work, right? So they work for us, and I know they'll work for you. But back on the topic of, like I said, if you are going to trade, you just use proper risk management. Go in the market, like you do anytime. Very positive. Stick to your plan, stick to your trading plan, and execute properly. Make sure your stuff is accurate before you take trade. Honestly, I would, if it was me, if I was going into the week to trade, it would have to be completely 100% perfect looking trading environment for me to take a trade, right? So that's pretty much it, Joe. Like you said, follow the dollar. Look at the dollar. When everything is going on, there's stuff being said on this day. Look how the market reacts to it. And not only are you going to watch this stuff happen, you're going to grow experiences. You're going to have experience of just saying this being your first time in an election trading, looking at the markets during election day, right? So, which is pretty cool, right? You're gonna be able to experience all the things that's gonna happen. So when it comes to the next time, you'll know how to tackle it. You'll know how to trade it and things like that, right? So, and that's what me and Joe are doing. This is Joe and I's very first election and NFP week together. So this is new for us too. So we're gonna go at it, but we're gonna be disciplined about it. And that's what creates success is discipline, right? So we're going to follow our plan. We're going to follow everything that we need to. We're going to dot our I's, cross our T's to the max so we can, secure our investments.
Yep. Yeah, guys, really at the end of the day, if you're in the market, that's fine. Just follow these 3 simple rules. If you're not going to stay out of the market and you choose to trade, then use proper risk management. That's first and foremost. Second is make sure you're following your trading plan. Make sure you know what you're doing. And if you have any indecision, if your gut tells you that you're not sure or you're like indecisive about something, then that right there is your answer. Stay out of the market. And if you are going to stay in the market, then that's great. There's lots of money to be made in NFP week and election weeks. You can definitely make money. I would recommend, if you do trade, we would recommend that you would consider trading on the higher time frames as well, because they're less volatile. All right. So if you're going to trade this week, then you might, consider trading on the 1 hour, the 4 hour. Typically we trade only on the 15-minute a lot of times. And we use the 1 hour and 4 hour for doing our markups and everything, and making sure that we're securing our entries properly. But like I said, you may want to trade only on the 4 hour, 1 hour if you're looking at it this week, because then it will take out that indecision for you. It'll be a little bit slower moving, but less volatile, and potentially less catastrophic to your equity and your balance that you have in your account. So with that, Hunter, anything else before we let them go?
No, guys, just stay positive. Whoever gets the election, who cares? It doesn't matter who gets it. It matters what you do, to reach your success. What do you want out of life? It's not what Donald Trump wants or what Biden wants. It's what you want, right? Don't let them two guys dictate what you want out of your future, right? That's all I've got. And stay pipping and dipping, guys.
Yeah, be kind to each other. Be kind to each other. Get to pipping and dipping. If you don't do it this week, you'll get back to it next week. And if you haven't already, subscribe. Remember to subscribe to the channel. Hit the button. Go ahead and subscribe, and then put it in the comments to subscribe. And if you're up for joining our Facebook group, where we have access to all of our training, then hit us up. The links are below, how you can join our Facebook group and get started. So with that, guys, thanks for stopping by Pippin and Dippin Academy, and we look forward to seeing you in the next video. Take care. Bye-bye.